Hi guys, good morning. So let's quickly look at something very important in our learning process as traders. Is very crucial, and this basically stems from the internal liquidity to the external liquidity. So we want to look at the concept, want to quickly look at the concept of internal liquidity to external liquidity and liquidity grabs. And also want to look at what liquidity sweep means, what is engineered liquidity, and what is liquidity plus inducements. So we are going to be looking at this on the chart, but first of all, let's just quickly look at this. So the concept of external liquidity and internal liquidity is based off of the notion of as to how price will book and move the way it does. So we already know that price moves from internal liquidity to external liquidity. However, we must note that these structural levels have specific points on the charts. Okay, so having said that, let's quickly look at the charts and let's see how that connotes with what we are saying. Hold on, let me share my um, charts. Okay. Okay. Share my screen. Good. So I'm just going to use a dark screen because of my eyes. All right. So when we talk about internal liquidity to external liquidity, we are basically talking about external liquidity being old highs and old lows. So we're just going to zoom out to our weekly. So external liquidity being old highs, old lows, and old highs, and internal liquidity being fair value gaps, basically fair value gaps and inducements, sort of fair value gaps and inducements. Let's look at the daily, see what it looks like. Okay, so anytime we see an old high, a former high like this, is an external liquidity, and we always see that price is going to somehow find her way, retesting or breaking an external liquidity. And also when we have stuff like all of these inside fair value gaps, however, this is on a daily time frame, right? When we have this, okay, let's look at it on the 1 hour time frame so you just be a little bit more clearer. Because 1 hour time frame is the time frame of us day traders. That's like the time frame that we use to frame our decisions. So all of these small, tiny fair value gaps we can see here, all of these fair value gaps we can see here are what internal liquidity. And we can also see something like an inducement. This is also a structure. This is a structure which has the wicks of the candle. This is a structure as well. Price, took this structure, formed another one, but didn't take the former one, which is what like kind of gave us the bias that okay, we might be selling, and seeing that this structure, which is an inducement liquidity, did not completely fill this internal structure. We should expect price to just come take these levels and maybe possibly now give us some movement to the upside from here. So that's like but that's not, we're not yet to look at all of that. So but when you see highs like this, be it on the higher time frame, which is the 1 week down to the 4 hours, or lower time frame, which is the 1 hour down to the 5 minutes, these are external liquidities. This high, this high, this high, all of these are external liquidities. And the external liquidities can also be this low as well. It's just basically former highs and former lows. And internal liquidities are areas that we see imbalances and inducements. So that's just basically the concept of liquidity, that's external liquidity. Now, when we talk about liquidity grabs, right? When we talk about liquidity grabs, it's the same thing. We're just trying to say that price will, when we talk about a liquidity graph, we're saying that price will come low to take this guy out. Okay, price will come low. Okay, sorry, kind of like short on this pair, but when we say liquidity graphs, we are basically saying we want to see price come low, take some levels. We want to see price come to some levels. We want to see price come take up some levels. That's what we mean. Let me use a cleaner chart. That's what we mean by liquidity graphs. We want to see price sell down to this level or this level or this level. You know, that's what we want to see price go to a point of liquidity, basically. So it's our job as traders to do what? To examine where are the current liquidity by understanding the current order flow of the market. Okay, and from what we can see here, we have this is a 4 hours chart with 35 minutes closure. I'm just using this as a typical example right now of what it is. This was the last low that price took with a body, this low, and price is still currently inside the range of the last high and the last low. Maybe we should just draw that out. This was the last low that price took with her body. Okay. This is, let me change this to, okay. The price also took, let's also not leave out this one that price took here. So basically price is still inside the range, and anything maybe a break above this range and a close above it is maybe what can indicate to us that maybe price now wants to change direction, because this was the body, this was the wick, and price is still inside the range. So but then this thing here and this thing here and this thing here are all liquidities that price is looking to grab. But like I said, we need to understand order flow first before liquidity comes in, because it's in the hierarchy of confluences. We need to understand order flow. We need to understand what is price currently doing, which people are currently dominant in the market. So when you understand people that are currently dominant in the market first, then you can now understand which of the liquidities is price going for. Where is it going for? An internal liquidity, or is it going for an external liquidity? Okay, is it going for an internal liquidity, or is it going for an external liquidity? So that's just basically it. So from what you can see here, obviously you don't need a soothsayer to tell you. The candlesticks will tell the story, and also we have the price chart pattern, as you can see. So what we have here, understanding this is a low, price formed a high because it took this bunch of lows, then formed a lower low here, formed a higher high, formed a lower low, but did what? It failed to form the higher high, so it took this low instead. So currently we are in the range of this low that it took. So we want to see price drop back, come back to the origin of the move, okay, which is going to happen, which is like a structural move, because as you can see, we have something like a structural, we have a trend line in equal. Let me see if I can make this thing lighter so we can see what I'm actually doing. So as you can see that here we have, this was the break. So currently price has not left the range. If it leaves the range, closes above it, okay, we know we are going to buy. But from what all indications, we should go back to the origin of this move, which is the external liquidity. Okay, which is the external liquidity, which is the old low. We should go back there, and then we should find a way to do some kind of transaction to either continue going lower or we buy. So that's just basically what how to frame a trade using liquidity. You must first of all understand the structure of the market on the high time frame, which you already know that the 4 hours gives you a bias. The 4 hours gives you a directional bias of what exactly you should be doing in the first place. So from the 4 hours, you can scale down to the 1 hour time frame where you can, for me, I prefer to just scale down to the 30 minutes anyway. It gives me more clarity of what's going on. So from what we can see on 30 minutes time frame, we have a small tiny order block here that even if price wanted to buy, that's not yet been triggered. So this thing here is just, for me, it's just a bunch of dramatic things actually happening, and I don't trust it, and I think it's just a fake out. But in a situation like this, usually, unless you've already drawn your confluences, but anyway, we're not even talking about taking trades anyway. So, but that's how liquidity. So, understanding that price has not completely filled this fair value gap, and we said that internal liquidities are like imbalances, which are fair value gaps and what inducements. So, what can we see? We can see this bunch of inducements here. Price has not completely filled it as we would want, right? Price has not completely filled. Okay, in fact, let's not even, we have these guys here, quite good, right? We also have this bunch of equal lows here. So we just have liquidity hanging everywhere, everywhere. So it's up to us to understand what the terms liquidity are. Okay, it's up to us to understand. We have these guys here, which price dropped and took them, formed equal lows, which we expect price to still drop, take the equal lows, and so on and so forth until the origin of the move. And of course, like we said, in the hierarchy of forming your trades, we have the structure. Structure comes first. After the structure comes, we have you understanding where your supply levels and your demand levels are, and then you understanding where the nearest draw on liquidity will be. So as you can see, we have some bunch of equal lows here on the 4 hours. So I expect price to raise these lows. So now that is that for understanding internal liquidity and external liquidity. You can also do some extensive research on it. Let's quickly talk about engineer liquidity sweep. Okay. But this is a note I have on my liquidity sweep. Let me read it out. So it says, what is a liquidity sweep? A clear break of structure or a test of structure. If it is a full body break of the candle, it signifies that there will be a continuous move in that direction of the break. Okay. And if it is a test of structure, we should see a pull to the opposite direction. So let's just look at that before we continue. Liquidity sweep, what does it really mean? What's the concept of liquidity sweep? It's simple. Liquidity sweep. Okay, let's look for a place where we have like somewhere like here now, right? Somewhere like this place is an old high. This place I just marked is an old high because you can see that this candle swept this high. It's an old high. Let's look at it on the daily so that we can also conclude. Fantastic. So as you can see, it was an old high. And now what price did was it tested that high. So we said that anytime price tests the high without closing with the body, anytime price tests a liquidity zone, be it an old high or an old low, or even an internal liquidity, without closing with the body, we would most likely see a pull to the other direction, because what it has just done, it has swept liquidity, it has taken orders, and it is dropping, it is now moving in the direction of the big players. It has taken orders. So that is what we mean by a test. Let me also look for another place. Fantastic. Now, this is a liquidity sweep that just happened here as well. Okay, what happened? As price took this structure here, let's look at it on the 1 hour time frame. Okay, So this is what we just marked as at that time. So this was a low. The price did what? Swept. Okay, this is tricky because you cannot actually compare the okay, but it's okay. Now this was a low that price swept with a body. Okay, this was the candle that swept this low was this particular little tiny dodgy here. This particular little tiny dodgy, and as you can see, when it swept it, this is just for context sake now, right? As you can see, when it swept it, what happened? It tested with the body. It did not close below it. So there was a pull in the opposite direction. As if that was not enough, if you go back to the daily time frame and you look at it, you see that it swept it and okay, this is the daily time frame. You see that it swept it it tested it with the wick and it went the opposite direction. It tested it with the wick and it went the opposite direction. That's what it means to have like a liquidity sweep. There are two types. It can be a break and it can be a sweep. Now, this is a sweep. Let's look for what a break is. Let's look for what a break looks like. A break is simply a break of structure. Okay. Okay, good. We found one. Now, as you can see, this is the high of this guy, right? That's the high of the guy. That's the close of the candle. That's the close of the bearish candle. What happened? You can clearly see that price closed with the body above it. Let's look at it on the 1 hour thing or 4 hours. So what happened? Price closed with a body above it. This was the body. This particular candle was the body it used to close above this high. And when it closed above the high, or if that one is not okay for you, you can also use these highs here. So as you can see, these other highs here too. So as you can see, these other highs here too, right? When price closed above these highs with bodies, you can see this body price used to close above it. When price closed above it with a body, it continued in that direction. That's just the difference between liquidity sweeps. When price closes above a particular liquidity point, which can be, if it's an external liquidity, it is an old high or an old low, right? Price closed above it with the body and did what? And continued going in that direction. Continued going in that direction. The same thing, price closed above this guy. Price wicked, price tested it. It did not close below it. It tested it and continued going in that direction. So even if it's a bearish movement, it's the same thing. Let's look for a bearish movement. Let's look for a bearish movement. Okay. So these were a bunch of lows. Okay. These were a bunch of old lows that let's mark them. A bunch of old lows. Price closed with a body. A bunch of old lows. Bunch of old lows here. Price closed with a body below these lows and what continued to drop. Close with a body, retested the candle. This candle that closed below them and continued what? Selling. So it swept these lows and price retested the structure of the body of the candle, which is this high to this high, and did what? Continued going down. So that's basically what we mean by if a candlestick closes, let me read it again. That's basically what we mean by liquidity sweep being a clear break of structure to continue, or a test of structure to continue to move to the opposite direction. That's what we mean. So it's basically, as a trader, your job is to continue, checking and testing all of these things. Look at this test here. You can see this, how this was a test of this high here. Okay, it was a test of the high. It was not a close. It was a test of this high, and what price pulled to the opposite direction. Okay, price pulled to the opposite direction, although it still came back to fill this fair value gap and also retest this old high. When it took this liquidity here, which was also a test, as you can see, it was not a break above. It was also a test with the wick. Okay, it's a test with the wick. It came back, retested this high, and moved the opposite direction. So that's basically what we are talking about when we say the concept of liquidities and liquidity sweep. So let's talk about engineered liquidity. Engineered liquidity basically is price basically doing some kind of transaction, like what is currently happening on this chart right now, on this current chart, is, for me, is an engineered liquidity, because engineered liquidity is just basically price forming a range, just ranging, from this high to this low, nothing significant actually happening, just ranging, and forming transactions, which we know that ideally price breaking above this range will give us that what buy, and price breaking below this range will give us that sell. So engineered liquidity, this is a lower time frame, so it's enough to actually just wait out and see what exactly is going to happen, because anything can happen. Price can just get to this zone, just take all these bunch of equal highs here and still dump. Okay, and it can easily get to this zone, react from this little thing here, and buy. So we just need to wait to actually see what is going to happen. And besides, that's for people that are taking this, people that want to trade. Today is like a beginning of a new month, so it's going to be tricky. Okay, so having said that, engineered liquidity is basically price transacting to make a decision. So it's going to just be forming some ranges and eventually just break out of any of the range, and then we can now be able to make a decision and join it on where it intends to go to. So that being said, inducement liquidity, we already know, is where we have like an inefficient retracement of price. So let's look for areas where we have inefficient retracement of price. So we have something like this, which we have a fair value gap here. This is an inducement. This is an inducement which price has already taken. Okay, price has already taken this area here. Okay. So because price has taken this area here, it's kind of like, okay, when price took this area, this was the candle that took it. Price now has created some inducements here as well, which we want to see taking off. We want to see taking off. Personally, for me, that will be my best approach. I want to see all these guys taking off. Sounding like somebody I know now. I want to see these guys. These are what we have as inducement, because they are not efficient. Price needs to be was that. Okay, let's look at it. Okay. Bonacci actually says that price has come inside, but we still need to see price clear of these equal lows here and react off this tiny little order block here. That's what we want to see. That's what we want to see. Personally, I'm not a Fibonacci trader. I I am not a Fibonacci trader. So don't know what I'm looking for in this gun box. But somebody said it works. Okay. They're basically the same thing, this gun box. So guys, that's basically what we know as inducement. So remember that it is basically an addition, is a makeup of how you frame a trade, from your structure to your levels, that's your key levels, demand and supply levels, down to where price is currently dealing, the dealing range, the liquidities that are close by, and obviously that's what that is. So yeah, we have price, at a very interesting zone, and we just basically want to either see a push down to buy, or we see a push up to whatever, we will stay reactive. So guys, that's for now. I'm going to also drop the write up on the group as well, and I would also drop this video as well. Thank you so much for connecting. If you have questions, ensure you reach out to me. You already know where to find me. All right, thank you all. So that's all. Bye for now.